very interesting development in gold. It doesn't look spectacular at first glance, but it's quite bullish. And gold miners, one of the ETFs, setting up for a possible swing trade. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Before we jump into the gold charts, a thank you is in order. Thank you very much. We broke the 1,000 subscriber mark. I know for a lot of channels and people, 1,000 subscribers is nothing. But here at Bull Markets Lifestyle, we value each and every one of you. So for us, that's a big deal. That's our first milestone on our way to big things in the future. Now let's jump into the charts. Also, I would like to point out big announcement at the end of the show that I think you will really like. This is the gold price. So we know we're still, since we broke out above new all-time highs, we have been in this uptrend channel. We all know about it, beautiful. And then now for closing in on a month, we've been in this inside bar of this long, nasty red candle. But as you can see today, after two nasty sell-off days, we're getting a green candle. And this is interesting because look at this support zone that even goes back further than this red candle. It's certainly very important within the dynamic of the red candle, as you can see here, how often it went into it, it touched it, and then went back below it and respected it. Here from the upside as well. And even the down move ended right at the lower end of this support zone. And now it basically opened on it, and now it's going up. But as you can see, it goes even further back. It goes back all the way through September. So that's really interesting. That's a significant zone that is important for us to notice and to understand. If we get follow through on this green candle today, then this could already be the end of the correction, and we could get the next leg higher that nobody's anticipating right now. By the way, I'm sure you saw the data. Chinese central bank has been buying gold again aggressively. In November, they used the correction to buy in aggressively. So the central bank buying still going on. And if you zoom out, there's another interesting thing that nobody's talking about, and I myself, to be honest with you, just recognize, and that's this. If we extend this upper resistance line of this bar, if we extend this out, look at what this takes us to. This basically is verified here as a resistance zone and here as a support zone. So what we can really see is, if we take out this as a false breakout, not only of the uptrend channel, but also of this sideways channel that we have with the purple zone on the bottom and this yellow line on the top, and it would be a zone if we do it correctly, because the upper end of the zone would be around here, right? Then what we're really seeing is that gold has been going sideways since October. That is quite interesting. That means all we have seen is a bull trap here, a bear trap here, in a sideways channel. So we're seeing a correction over time of this big up move that started in August and went all the way into October. And that's really bullish. We have two ways to consolidate with an uptrend, a downtrend correction. So a correction over price, the price depreciates significantly, then it finds an equilibrium, and that's what starts the next up move. Or, and you can see this, we had this over here. Or we see a consolidation over time, meaning for a certain period, the price doesn't do anything, it just goes sideways. And through that, it basically cools down the overheated sentiment and price action, and then has enough fresh new energy and buyers for the next leg up. And that's exactly what we're seeing here with gold, and nobody's talking about it. And to be honest with you, I didn't even see it either until today. And that changes quite a lot. And if we look at the RSI down here, we can see when we hit the upper end of the channel, RSI are massively overbought. When we had the bull trap, RSI massively overbought. And now it's cooling down. That's exactly what we want to see. That is a pull back in time, consolidation in time, and that is very, very bullish. Now, again, we still need to break around above these two candles on the close. So we're talking 27.30 on the close, and we are off to party. Talking about party, let's look at GDX. GDX is, as you know, the ETF for the big blue chip mining companies. And as you can see, this looks really interesting. You can also see it looks very different than the gold price, right? Gold price consolidation over time. Here we had this consolidation over price, right? Sharp correction, but you also see we broke the downtrend already in November. Now we tried to break up, we made higher highs, we made higher lows, and now we're back down at the lower end of the uptrend that has been in place since April and has been validated once, twice, 3 times already on the downside. Plus, we have this blue support zone that you see here that I drew in. As you can see, this goes back. Oh, this is still going back, 2022. So this is a significant horizontal zone for the people that prefer to trade horizontal zones in the charts instead of uptrends and downtrends. And I like to do both because it gives me more factors to factor in. And as you know, I like it when I find a zone where they have numerous trend lines converging, horizontal, uptrend, downtrend, and so on and so on. So now we're reaching a zone here with 2 factors, the lower end of the uptrend channel, green, and the horizontal zone, blue. And we also have the upper end of the long-term downtrend that was broken, which makes this whole scenario so bullish, right? If I zoom out, you can see we clearly broke the downtrend. We started this new uptrend channel, and now we're back at the low end. We're right here at the low end of this uptrend channel. Now we already had a successful retest, so I would prefer for us to not go all the way down here. I would prefer for us to stall at the lower end of the uptrend channel, but we could very, very likely see something like this, which makes complete sense. Why is that? Okay, so the GDX, that's the ETF for the big senior miners, the Newmonts, the Barricks, the big liquid miners. That means that is where the institutional money is in, right? They cannot invest in explorers, and they don't want to either, way too risky for them, or developers. They can barely invest in some of the juniors at the moment because valuations are so low as far as market cap is concerned. But they can invest in the seniors, so in the GDX, and that's what they do. The GDX, that's their vehicle to invest in the big mining companies and the mining companies overall. So what do they love to do? They love to steal money from the retail investors and put it in their pockets. How do you do this? By doing exactly this, what we saw here. Break the downtrend on the close, trigger the stops, buy up all the money that gets flushed out with the stops, make the retail investors look like idiots, and laugh all the way to your next bonus check. That's how Wall Street works. I know you guys don't like to hear it, but that's how it goes. Look what happened here. Close below the uptrend channel. We opened way lower because that's all the stop loss that were set in the systems, and they got bought all the way up. That's textbook investing by the Wall Street. So we're going to put GDX on our watch list for a swing trade long. We're going to have a very close eye on gold, because if gold starts to develop strength now, then GDX will definitely turn, oh not definitely, nothing is definitely, I can't guarantee that, nothing can be guaranteed in the market, but probably quite high that GDX will turn at this double support zone. And that would set up for the next leg higher in gold, and then a nice GDX run and swing trade on the long side. So on to two announcements. First announcement this weekend, second half of Drinks with Dan, the Arizona State edition. Maybe you saw the first one last weekend. Was a great time. Nice glass of wine. Let's talk about the markets, about life, about trading advice. A little bit more casual. Second announcement. Actually, it's three announcements. Man, you guys get a lot of value here from this channel. All right, good for you. I love it. Second announcement. Because we broke 1,000 subscribers, I'm keeping my word. An additional Drinks with Dan show. So the next 2 weekends, we're going to do Drinks with Dan. I'll be hammered after we finish all these shows. Same thing. This will be the weekend before New Year's, and we're going to talk again your stocks that you like, markets, life, trading advice. Put your questions in the comments. If you saw the last show, you know that's where we pick the questions and we answer the questions. Because it's New Year's, and this is the big announcement, from this week, I'm going to start my series, my 2025 predictions for commodity sector, Bitcoin, stock market. We're going to start with the commodity sector. It starts this week. We're going to do silver, my prediction for silver for 2025. Why? And the reasons, that's the most important thing. The reasons why I think this is will be my price target for gold, for oil, for my hottest trade in the commodity sector 2025. It'll be a different one than you probably think. So this is coming in the next weeks, starting this week's my outlook for 2025, because I cannot believe the year is already over. It just flew by. Have a great start to the new week. Talk to you later. Bye-bye.